Do you think for Indian equities to rally, global commodities have to correct? Otherwise, there's no bull market for us.
I wouldn't be, it's not that strong because, 5 or 6 things make for a move up in the market. But if you have massive moves up in commodity prices, which I don't see, because remember, a lot of the commodity prices, commodity price inflation that we saw in 06, 07 was driven by speculation. Yes. There was a China angle, great, 50%, 60% world consumption of X, Y, and Z. A lot of it was spec. And the spec was driven by cheap liquidity and leverage that providers to the traders was available. Yes. That gig is over, right? Everybody's very watchful of how much leverage they provide.
Risk management.
Exactly.
Yes.
So, can you see, as we did, it was 145 or 150 oil at the time was a straight spike up, silver the same thing. I don't think you see that because that speculative element is really not there anymore. So that last 20 or 30% won't happen. Now, can oil go up another $5-7 from here? The answer is yes. But it's not going to run away like we saw in 05 or 06.
So that's the big trigger, essentially.
Yeah.
Commodity prices, they come down, rate will come down, and that will benefit earnings.
And even if commodities don't come down, if we're able to take rates down by 100 bips, I think that'll be a huge plus.
What's your big call for 2013 then?
Gosh, the big call is, there's enough momentum that, maybe a GST comes through, maybe a land reform come through, maybe power sector reform, and actually that we haven't talked about that. If we can get 2 or 3 of those things in the frame, I think those are game changers. I mean, if you look at the 25 bills that they're going to put through in this winter session, for me, most of them don't mean anything in terms of moving the needle. But if you get these 2 or 3 things done, phenomenal, huge.
Are we abusing the word reform? Because none of the reforms are game-changing in nature. They are symbolic. They'll not add 1% to your GDP or they'll not fix your macro. So why are markets so excited about reforms?
I totally agree with you, by the way. I think it's massively overplayed because, they're talking about FDI and retail today. It's a sentiment changer. Is it going to, are you going to have flow of funds in the next 12 months that change the outlook for rupee? The answer is no. Is it going to materially change, the sort of farm to fork? Somebody used that expression a while ago. Yes. The answer is no. It's a 4 or 5 year thing.
Maybe more.
Maybe more, absolutely right. So what you need is near-term, domestic-related, and there are many of the senior sort of industrialists who've talked about GST being a material game changer. If you can get that going, it's terrific. Land reform, they've talked about in the last, several months. Those are the things you need. Those are real reform measures. The 25 things, right, FDI and insurance from 26 to 49, great. Fine, we need to do it. I'm not taking away from that, but is it going to allow us, is it going to allow inflation to come down such that you can take rates down, such that you can go to 25, 27,000 in the sense? Those are the things to think about, and I think we're a ways from that.
On a scale of 1 to 10, what to your mind are the chances that in the next 12 months we will be convincingly trading above 21,000, which was the previous high?
I would like to think it's a fair chance that we do that. I mean, that's 2,000 points from here, right? That's 10% from here. The answer is, I'd say it's better than 50-50 shot it happens.
That's a clear hedge.
70-30.
70-30. For markets now to stay above 21,000, which according to you is a 70% chance, apart from liquidity and earnings, what do you think will be the key trigger?
I think, as I say, if you can get these 2 or 3 reform measures, if we get the power situation sorted, you get a sense that supply-side bottlenecks are being at least addressed. It takes time to take care of them. At least they're being addressed. Then people say, okay, inflationary expectations managed. Inflation perhaps comes down, 50, 100 basis points. That's a completely changed environment in my view, because we're very rate sensitive, like it or not. And yes, you can grow with 10% cost of money or 8% cost of money or whatever it is, if there's certainty around stuff. So if we get that certainty that the government's committed, they're pushing, they're not sort of stepping back as they've done the last few years, mood gets better.
You mentioned that staples are expensive. So are you making a case that staples as a group, that group could go through a price-wise correction or a time-wise correction?
Again, there's so much price-wise, a little bit of it trading at 30 times, maybe they go to 20 times, or not, sorry, 28 times, not 20 times, excuse me. But, it's got to be part of somebody's portfolio. There's just enough consumer spending going on that, these are all marginal things for us, right? As I say, if you're a long-term holder, you've got to be in that space.
When you say you like banks, I can crudely divide the banking space into two. NBFCs we've discussed, I'm keeping that aside. Private and PSU. What are you hot on?
Right now, I think the bias is PSU because they've been beaten up quite aggressively. Some of the private sector banks, as we were discussing, are trading north of 3 times. Doesn't take away from, good stories, well-managed, risk management, etc. in place. But from a trading perspective, short-term, PSU banks have got beaten up. Does it make sense to buy and hold an SBI today? The answer is yes. That doesn't mean you get out of some of the other private sector banks to get into SBI. But on balance, a great place to be.
That's a big call. That focus on PSU banks. The risk-reward ratio is stacked up in favor of going long when it comes to the public space.
Correct.
I asked you this question last time when we interacted on this forum. I'm going to ask you that question again. If an investor walks up to you and his question is, I'm ready to take a 15% downside, maybe a 20% volatility, but give me some multi-bagger ideas. How would you address this query?
Gosh, that's a tough one. I would say if you go into our key calls, there are at least 5 or 6 names and see if it's got to be a multi-bagger, it's got to be in the mid-cap space, right?
Again, high risk as well.
So anything that's $200 to $500 million, over the next 10 years can be a $2 billion company. And certainly not to go back to a bunch of NBFCs in that space, that could be quite interesting.
Could Religare be one?
Religare, actually, multi-bagger might be maybe tough because, again, we're very large. And if you look at, as a mutual fund business or a money manager, we manage $15 billion. We've got a very large retail business. We've got an interesting life company. We've got our business, which is a regional investment bank. But it's large, and large businesses to grow at 15–20% a year is really quite hard. But in my opinion, and you might say I'm biased, are we an undervalued story? The answer is absolutely. And I think we need to do a better job getting the story out of how all this hangs together.
Good to have you, Nitina. Thank you for joining us, and good luck for the year 2013.
Thank you.